lot of measures were undertaken to make sure that we are not compromising on the safety of our people as they came inside. These actions started from last year, but clearly when we saw the second wave come in this year, some of these actions needed to be intensified. And in April, we put together a task force the moment we sensed the wave 2 was around. And there were multiple actions we did to help our people feel really safe. Some of them were extending medical coverage to a larger chunk of our employees, covering insurance in areas which were earlier not covered. We procured a lot of oxygen concentrators. As a lot of you might remember, there was a period of time where there was oxygen shortage. We were able to procure. We had on-call doctors for our employees. We had medicine support. We had financial loans which were given against salary to those who required it, as well as emotional well-being counseling during the pandemic. One of the things which some people felt a lot was the mental well-being also took a toll during the pandemic, and we were able to do that as well. Then there is, as we moved out of that phase where you required immediate medicine support, it is now all about vaccination. So we've got about 2,500 odd employees who are on our rolls. But the call we took is that we are going to provide vaccination support for 17,000 people who are connected with us in some way or the other. This included our 2,500 employees and their families, but it also included our temporary blue-collar workers, our retail executives who represent us in the stores, our service engineers who go and visit consumers' homes. And for us, it is really critical that anybody who comes in contact with Whirlpool as a brand feels really safe interacting with the brand. And that's why we provided the support for 17,000 people. Very pleased to announce that already about 78% of the 17,000 is vaccinated with the first dose. Within this, if I look at our manufacturing facilities, 98% of our manufacturing facilities have now got people who are vaccinated. This gives us a lot of confidence that not only are we doing something good for our employees and our partners, but it will also give us a lot of leverage in case there is a third wave, because there is likely to be less disruption for us and more business continuity because of the number of people we have got vaccinated. We believe vaccination is the single biggest thing which will help not only the nation, but smaller communities and companies ensure continuity of operations in case there is a third wave. And we feel really well covered here. On return to workplace, there was a question where, how are we ensuring return to workplace? Our manufacturing facilities have been running full steam for almost the last 3-4 months now, and we increase our production in a calibrated fashion. In our offices as well, we continue to now slowly bring back people, again in a calibrated fashion where we are not jeopardizing anybody's safety, and yet we are ensuring business continuity. There were a lot of questions around our margins, around the cost pressure because of raw material cost going up. Can I request Aditya to take the questions around all of these? Again, there's a cluster of questions around margin, cost inflation, cost takeout. I'll pass it on to Aditya.
EBITDA margins and lower margins over the period. Questions have come from Ms. Binu Bansali, Mr. Dhruv Jain, Ms. Renu Bed, Mr. Prashant, Mr. Charanjit, and Mr. MP Bhutani. The way I want you guys to look at the P&L is, there are two sides of the P&L, the cost side and the demand side. From a cost side, there is a bit of structural inflation, which is a part of the ongoing business, which we manage on an ongoing basis. So that is structural and that will stay. However, what has been unique in the last 1 year has been a significant inflation, primarily COVID-led inflation, on account of two reasons. One is the supply side disruption. There was a 40-day of lockdown. The working capital cycle got impacted. There was a migration of labor, and because of demand erosion, suppliers scaled down their capacities. And B, then there was a post-COVID pent-up demand, both domestic as well as global. And since there was a recovery of demand and the capacities could not kept pace, which again led to the cost side inflation. But this inflation is very unique because this is COVID led, and we see it more of a short term phenomena rather than a long term phenomena. And we expect the things to normalize as there's investment which keeps coming back in capacities over a period of time through various government initiatives as well. On the demand side, we're all aware India was the first country who would announce the 40-day national lockdown, which happened end of March 20, around 22nd March, and there was a 40-day of complete lockdown, which has significantly impacted our volumes and demand right in the middle of the peak season. What it does is it results in a significant deleverage on the P&L and hence impacting margins. However, again, this is purely COVID-led, as there was a complete national-wise lockdown, and we again expect this to come back to normal as the things start to improve. So, as a result of these two factors, which is on the cost side and on the demand side, we see some impact on our profitability. However, then there are questions around what are the measures we have taken to address the profitability, and what are we doing to address this going forward, and our expected margins or the pricing actions. Now, we've taken some of the actions which will help us secure our profitability. We look at our profitability under three broad levers. The first is the cost lever, which is the back end part of the organization, and we have a very robust and an institutionalized cost productivity program under which we track both the direct as well as indirect cost levers. So there are specific teams who are working on looking at all the indirect cost levers, which might include your discretionary spends, your travel, your legal, your outsourcing, your rentals, your negotiations, your brand spends, etc., etc. And on the material side, which is the direct cost, there are work streams who are working on optimizing the design and hence structural reduction in the costs. And B, on supplier negotiation side, securing the best deals from our suppliers. So that's the cost side of the action we are taking. The second is on the revenue management side, which is the front end part of the organization. So first, our endeavor is to execute our go-to-market action plans, drive reach and extraction, which will help us drive volumes and margins. Then we are always on the lookout for improving our mix through our line structure optimization and hence extract margins from our product portfolio. And the third piece is the cost-based price increase. So we have anything which is unmitigated out of our cost actions, out of our revenue management strategies, gets passed back to the consumers through cost-based price increases. Over the last 9 months, starting January, depending upon how the costs have increased, we've taken 3 rounds of price increase, and roughly approximately a 15% of price increase has been taken to protect the P&L against the inflation. The third piece on the P&L is the demand recovery, the volume side of the story, having spoken about the back end and the front end part of the organization. And as the last year was impacted by a 40 days of national lockdown, once the thing starts coming back to normal, we expect a pickup in volume, especially on that loss which happened in the season, and the complete variable margin on the volume flows into the P&L, which gives us a leverage on the P&L and helps improve the profitability margins. So with all these actions, we're very confident of securing our profitability in line with the historical trends, and we're very confident of delivering a sustainable and profitable growth. For next question, I will pass it on to our chairman, Mr. Irwin, to take on the next question.